Of course, if you're following Nvidia stock, you're probably well aware of how much Nvidia is benefiting from the rise of artificial intelligence. However, could this be undercover bad news for the company longer term? Could the rise of artificial intelligence increase substantially the amount of competition Nvidia faces? That's an interesting question and one that was brought to Nvidia management in their most recent earnings conference call, which I thought was really interesting. So I thought I would share that with you in this brief video here. So the question came from Bank of America analyst Vivek Arya asking, how do you see the competitive landscape change in the next 2 to 3 years because of the rise of artificial intelligence? And CEO of Nvidia jumped in to answer the question saying, look, we have competition from every direction. We have competition from existing semiconductor companies, and we have competition from CSPs with internal projects. CSPs are cloud services providers like Amazon Web Services, and you may be aware that Amazon announced that it's releasing its own semiconductor products coming out to help with artificial intelligence. So that's going to be another source of competition for Nvidia already. And given that Amazon is a very deep pocketed company, that could be they could be a significant player in the industry going forward. However, the CEO saying Nvidia's value proposition at the core is that we are the lowest cost solution. And the amount of engineering and distributed computing, fundamental computer science work is really quite extraordinary. It is the hardest computing as we know. Being the low cost provider in the industry is extremely beneficial. Offering your products at lowest cost, it's one of the prime selling points to customers. The difficulty in this is the execution. It's hard to remain the lowest cost provider. It's one of the hardest strategies to execute on because you've got to really control so much of your supply chain to ensure that your cost of goods remains low so that you can offer the products at the lowest cost. It's very difficult, although if you can execute on being the low cost provider, it's also very difficult to compete against. It's very difficult to compete if you're already the low cost provider. You can look to some areas with low cost providers, including Walmart, that is facing some competition, but ultimately, very few have been able to beat Walmart on cost, right? You have other retailers coming in, but they're not competing directly against Walmart on cost because it's just so hard to compete against them. That's a strong competitive advantage that they've retained for decades now. So the cost advantages from being the low cost provider, the competitive advantages can be very long lasting compared to if your competitive advantage is innovation or advertising, marketing. Those areas are easier to replicate and copy, and then that competitive advantage can be eliminated in a relatively short time, right? Somebody can come up with a more exciting advertising, more exciting marketing, a more innovative technology that renders your technology obsolete, right? But if you're the low cost provider, that's very, very difficult to replicate. There isn't just some idea or some new thing that's going to take away your low cost advantage. This is more of a skill that is learned through experience and through execution, and it's something that hard to do, right? So this I like this. If I'm an investor, I like investing in companies where their competitive advantage is being the low cost provider. So the second part of it is that generative AI is a large scale problem and it's a data scale problem. And so what Nvidia means in this point is that it's going to be hard for somebody new to come in and take market share because they've already developed such a large scale, right? They've already got the infrastructure in place at scale that's going to be hard for a newcomer to come in and replicate. Now, if it's a deep-pocketed rival like Amazon, they can build that scale over a relatively short time because they've got such deep pockets, they've got access to vast amounts of data, and they can come up to par relatively quickly. So this second part of it is not as exciting to me as the first part of it, which is being the low cost provider. If I was an Nvidia stock investor, which I'm not, I do not own shares, I would be more excited about the value proposition of being the lowest cost solution rather than the second part of it in this regard. So it is something that Nvidia stock investors should be concerned about. They should not expect that Nvidia is going to have this market to itself. Maybe in the near term, maybe over the next couple of quarters, they may get a nice runway to capture the growth from this area. But over the next several quarters, Nvidia stock investors should expect competition to start coming in because it's such a lucrative opportunity. And whenever there is such a lucrative opportunity, competition usually comes in to capitalize on that trend. All right, so that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.